All right, guys, back to work. We survived FOMC. Hopefully you survived FOMC. It's back to work tonight, though. It's Wednesday evening. Time to get ready for Reaction Thursday. It's the 26th day of January, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades setting up for Thursday. Not just any Thursday, Reaction Thursday. The day after the big FOMC announcement. We got a lot of great trades setting up for tomorrow. Boy, wild market up into a range, back down. There's no shortage of trades setting up on my radar. I can easily see some long trades setting up for the E-minis and the oil. And you know me, we'll talk about how to continue this move down for tomorrow. By the end of tonight's video, I'll go over all my favorite trades for tomorrow. We'll also cover some stuff that I'll try to stay out of trouble tomorrow morning, right? Keep yourself out of trouble as well, whether you're trading on your own or you're trading with us tomorrow in our trade room. Before we jump into the video tonight, though, got a lot to cover in tonight's lesson. Don't forget to subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so hit that subscribe button, hit that little bell icon, because a lot of this stuff is very time sensitive. I always appreciate you guys subscribing. And if you guys have any questions for me tonight, I love to answer questions. Drop those questions for me in the comments section. Love to answer any questions you might have, so don't be bashful with the questions. And if you guys enjoyed this video, if you stayed around today to watch the video tonight, if you enjoyed the video as much as I enjoy making, hit that like button for me. I appreciate you guys carving some time out for this video newsletter. But enough of the intro, right? Time is ticking. Thursday is right around the corner. Reaction Thursday, we call it. As I mentioned last night, tomorrow, the Thursday following the Thursday following FOMC is oftentimes one of the best days to be a trader. So we definitely want to make sure the game plan is put together for tomorrow. Lots of great trades on my radar. As you can see, got a lot of big bear moves down right now. Big bear move down on the S&P. Big bear move down the Nasdaq. Relatively strong move lower here on the crude oil. But I'll tell you, there's a lot of support down here. I'll tell you, it's not that easy to be a seller right now. There's a lot of great buying opportunities here. I can see at least 3 or 4 different reversal patterns setting up on the S&P right now. The Nasdaq, you'll notice, is a little bit different. So not as many options, but not to worry. We're going to get a bunch of good longs, set up some tracking on the Nasdaq. And the oil, right? Let's face it, right? Oil would love to snap right back up and rotate higher. I'm going to talk about why that trend line is important and kind of how we're going to use that trend line, hopefully tomorrow morning in our trade room. They're not all just long trades, obviously. We've got some really big moves down. The problem, though, is, again, with a lot of support below us and on the oil with a range above us, like I said, the sellers, they don't have a lot of easy options. We'll talk about kind of what it would take for me to want to be a seller on these markets tomorrow as well. Now, speaking of tomorrow's a Thursday, but it's not your average Thursday. Let's take a look at the schedule here for tomorrow. January 27th. Boy, almost done with the final full week of the month of January. As we look at the news for tomorrow, the 2 big news events are going to be that durable goods orders and the GDP. Yeah, you get the jobless claims in there as well. I don't think the jobless claims are impacting these markets like they were maybe a year ago, right, during the height of the pandemic. Durable goods orders, right, regarding manufacturing. GDP obviously will be very, very important regarding the health of the U.S. economy and in turn, right, the global economy. So we definitely can anticipate that is going to be the biggest news of the morning tomorrow. But really, the name of the game tomorrow is the world, or the markets at least, reacting to the FOMC announcement today. The FOMC came out today. Jerome Powell came out and he snuck in this very interesting word. And the word that he snuck in today was sooner, right? So they've been talking about, well, we're going to raise rates. We're going to start, weaning off the asset purchases, right? The easing process, the stimulants. But today he said sooner, right? So we assume this means the Fed now is starting to, well, they're trying to give some guidance to the rest of the world, the markets, of course, all the players out there, that, hey, they're going to be making their way to raising rates and starting to, withdraw some of this stimulus from the financial markets, right? Inflation's pretty high. Jobs markets are on fire right now, right? Very easy to find a job here in the U.S., probably most parts of the world right now. So we know what they said yesterday, right? We know what today. today. We know what they said today. As you guys know, though, the news doesn't matter, does it? The news is completely irrelevant. So, I mean, this guy could have said really anything. What really matters is how the market reacts tomorrow. So I'm not going to go into detail much more about what he said and why it's important, because it's really not important for us traders, right? If you're an economist and you want to impress people, then by all means you can geek out on the press conference notes. But for us traders tomorrow, our job is to trade the reaction, and oftentimes the reaction is very, very robust the following day. Remember, a lot of professionals, a lot of smart traders, they don't bang their head against the wall with some of the grindy price action, volatile price action on FOMC. They come back the following day. So we're very, very excited for Thursday's trading session. 8:30 news will hopefully get these markets moving nice and early for us, and we're going to find some great trades tomorrow in our trade room. Now, speaking of our trade room, don't forget we open up every morning 8 o'clock Eastern time. I would love to have you there trading this stuff right there with us. It's the best way to learn and earn, to do it right along with me every day. I'll put that link for you guys to get registered and join me tomorrow morning. I'll put it right below this video, either a button on the website or a link in the description. But let's get back to the charts though, right? You guys know what's on the schedule for tomorrow. 8:30 news is the big news report. But again, how will these markets react to the FOMC announcement here this afternoon, right? The word sooner, right? Well, how will that apply to tomorrow? Let's look at the charts here. S&P, Nasdaq, oil, they're all set to go. They all look pretty good here for some long trades right now, but hey, we'll play whatever we get here. What's the most important part right now in the S&P? The S&P, of course, made that dramatic, right, reversal. And as we talked about last night, right, there's that 1, 2, 3 reversal. And, what do? You find that channel and you buy the first pullback. So if you watched last night's video, you were hopefully prepared, right, with guns loaded to buy that first test, right? So anyways, long story short, market, of course, runs up into a trading range. FOMC comes out, the market dumps, and now at this point now, it looks like the sellers here are kind of running into some significant support down here, right? Some major lows from before. And so with support down here, right, and a range magnet overhead, you can see the sellers right now, they're struggling. They're struggling. They've tried once, they've tried twice, they've tried 3 times. And so you have to think, yeah, the bears have a lot of momentum right now. That's not a joking around move. It's a very strong move here, but there are definite signs of exhaustion when it comes to this market. Sellers also don't have a lot of options right now. They've got some rising support here. Again, lots of support down here. The buyers have all the options. They do. They don't have the momentum right now, but they have all the options. For example, right? Buyers can easily right now with that nice strong move get a retest off that low, look for a seller failure and buy it back up. One of my favorite trades for tomorrow. Buyers with a little bit more risk tolerance, right? They can look for that juicy trap right below that low off that perfect hidden channel. A little bit more aggressive on that one, right? Because we haven't retested that low. That's an option for the buyers here tomorrow. And then of course, right, just like that reversal that we saw early today, we may see a 1, 2, 3 reversal, and we might get that first test is the best test, right? As we always say, right? So there's no shortage of options here to be a buyer. How would we sell this market though? How exactly do you want to sell this? You can tell there's something here. You can tell there's something hanging out right there. You know what I mean? You can definitely tell, because come on, right? With a move like this, unless there's something in the way or a big magnet overhead, they should have already retested that low here. So there's something hanging out down here. These bears they're a little bit spooked here. The biggest problem I see for the sell side right now is not only are we sitting at major support, but there's all these lows down here. This is not a small area. Look at that area, right? There's a lot of levels there that sellers have to worry about. So really kind of the only way to really confidently sell this, because if it goes higher here, that's going to be really difficult to short into. It will, right? It may come back down, but very difficult for us to be confident selling into it. It'll have to push through this area, right? We'll have to get a big, strong breakdown, but then the challenge will be we'll have to find our entry right in this area, because that 42.12 area, that's that big low, right? That's that big low from, what was that, Monday, right? I believe it was, right? So again, the buyers have all the options, right? The sellers have to, again, the bears have momentum, but the buyers have all of the options. So as I mentioned before, there's really plenty of ways to do this. One of what I think is probably the safest bet for the buyers here tomorrow, strong run down. Anytime we see a range breakout with this much strength, one of the safest ways to buy this thing was to wait for it to retest, right? As we say in the trade room, close that loop, and then use what we call the two-try failure pattern, right? Use the bears trying once, the bears trying twice. Once those bears try a couple times now, I like to look for trend lines, right? Look for trap lines. But once you see that nice signal candle, think about it. The sellers have all their stops now. All the bears have their stops, all their exits, right? What happens if you get out of a short position? You have to buy your way out. And so if we can tick above that area, now you've got buyers buying, you've got sellers now are buying. There's a range above us. We're at support below us. So that's a really nice looking trade there. Again, retest the low, two-try for the old bears, right? And then, of course, get that thing running. Now, when this thing runs higher, now we know where they want to go, right? We know exactly where they want to go. They want to get back up into that range. They want to take out those big highs at 44, 45 and change. What I look for now is trade the turn, right? Trade the turn. Mark up that new high off those highs. Bring it right down to that low, all right? And then make sure you look at those prior swings, right? They love those prior swings. So again, it's a two-try failure. And then what I'll do is I'll look to buy that first pullback. Right? Now that first pullback, the way that I'm kind of illustrating it here right now as a trap, but as you guys learn in our video courses or in our free trading course, that could be a trap, that could be a pullback, it could be a seller failure, right? So the same price action entries that we teach in the Quick Start course, that free course on the website, which, by the way, if you haven't taken that course yet, what I'll do is I'll put a link here in the upper right hand. And I know a lot of you guys have already grabbed that. I get so many emails every day from you guys about taking trades, using that information. So it's awesome. What I'll do is I'll put a link up there for you in the upper right hand corner. So the next time, if you haven't taken that free trading course yet, definitely do so. So we double bottom, or we retest a low, 1, 2, two-try failure. Up we go, right? And then find that new channel, bingo. And again, we'll find whichever one of the entry patterns we can get our hooks into, right, off of that low. Two-try failure into that pullback. Second way to do this, I mentioned earlier, think of this now as a one try for the bears. Okay, the low of that first try is where the money is. All right, that's where the money is. If these bears can try once more, and see I'm doing this, I'm drawing the channel right off that high and I put it right at that low. Now these are definitely going to be a little more aggressive, right? They're not as safe and reliable as if we retest the low and then 1, 2. So on these, what I'll usually do is I'll go a half size position, right? I'll go a half size there, and I'll save a few of the bullets, right? Just in case I need, right, to finish it off, right? You know what I mean? This is how you can kind of get more aggressive, or go one contract on that one, right? Now remember, you need a good signal, right? We're not just simply blindly buying. Again, we talk about the signals in that free trading course I mentioned earlier. So this is a fantastic spot here as well. The trap is definitely necessary. I love that channel. And then remember, right, if this thing starts to rip running higher, keep your eyes on, let me back this thing up here. Keep your eyes on, watch for this particular setup right there. We call these two-try traps, right? Two-try traps. So again, it's what we would call it a crown reversal, right? Because it hasn't retested yet. So crown reversal, two-try, fit with a trap, right? And then as we run, watch as it runs, because as it runs, they love to get these, like right here, like right there, right? It runs up, shallow pullback, higher high in price. These are great trades, right? Those are great trades. So think about that over there, right? Up over here. You know what I mean? Runs up, really strong move higher, right? We see the buyers, again, they very shallow pullback, grab that trap off that low, a little crown reversal, right, into a two-try trap, going higher here. Another one we can look at, we may not even get it, right? Maybe we don't get this, right? Maybe the market runs higher here. What if we get a short squeeze, right? How about a short squeeze? What would a short squeeze feel like? Okay, a short squeeze will feel like this. it'll start to kind of, grind. You know what I mean? The reason why it grinds on a short squeeze is because the sellers are getting squeezed out. These are not buyers buying, right? Remember, when buyers are buying, they're buying low. They're buying low. They're buying low, right? Buyers, professional buyers, are going to buy low. They're going to buy low, right? Those are buyers right there. Those are buyers right there, right? So if the market starts to kind of float up, you can always tell a short squeeze or a melt up or a panic buy when it starts to kind of grind, right? So this thing starts to kind of melt higher here and starts to grind. This is when you know it's time to get pretty aggressive, all right? So this is always one of the harder parts to trade, because when the market kind of flies up like that, it's very tempting to go, ooh, I don't want to chase it. I want to wait for a deep pullback. But oftentimes those short squeezes, they're not going to give you those deep pullbacks. So draw that channel nice and tight, find a prior swing, and grab that first trap, right? And oftentimes, guys, these will be, something like this, where it'll grind up, you'll draw that channel, right? You'll find your trap. It could be a trap. We want to get underneath the moving average, right? Roping those bears like this one, right? With a failure pattern. Roping the bears with a failure pattern. Grab that pullback combination, right? Right there, right? See over here, right? See how they do that? It's a failure into a pullback, failure into a pullback. Very, very common on these failures, right? So trap, again, failure, pullback combo, and again, we know where the market now, right, wants to go here, all right? And again, I'm just simply kind of drawing the screen right now, but that'll give you a good idea of kind of what the entries are looking like. And again, if you want to see a lot more examples of the entries, right, the rules we use, how to find the right levels, you'll find that stuff inside that free quick start guide. We may go sideways, right? We may go sideways here. If we go sideways, all right, I'm going to talk about that in the NASDAQ, because the NASDAQ is sideways right now. Okay, so if we go sideways in the S&P, you can use the strategy we're going to talk about in the NASDAQ here in a second. Okay, how do we sell this market right now? Very, very, very carefully. The hard part is, let's say we rise higher here. It's very tempting to go, well, if they pull back, maybe there's some bears up here, we can sell it. It's not going to be easy, right? Because it's going to be a rising support trend line. If it goes higher like that, it's more likely to get trapped and start to run like this. So the idea of selling this thing as it goes higher, I get it. I get it. There could be a channel, up there somewhere, but it ain't going to be easy. It's not going to be easy to be a seller if this market goes higher here right now. What we need is we need to see a strong breakthrough. We have to really get through these lows here, because like I said earlier, even if they retest these lows here right now, I still think that two-tribe failure is going to be where the easier money is. So what would a breakout look like? What would a breakout look like? There are a few different types of breakouts we use in our trade room. The one that's kind of the easiest to learn, just to kind of keep it simple here, would be we retest the low, we hold the pullback, and we jump off the moving average. Okay, now remember, you're going to see a lot of times where you see strong moves, but they can't hold the moving average. So they have to get, what I would do, what I'm looking for is, I want to see them get through that low, right? Get through that low. Show me you can actually hold this. Because if they can't, it's going to go right back up again, right? So show me you can hold this. 1, 2, 3 breakdown. Okay, now once you get that 1, 2, 3 breakdown, once you get that jump off the moving average, okay, now we do is, we don't chase it. We mark up that low, we mark up that high, right? We find prior swings. We look for things like traps and failures and pullbacks, right? Off, right? Usually just above the moving average. That's where the money is, right? The money is always just above the moving average in a bear market, or just below the moving average, right? In a bull market. That's one of the breakouts that we could get here for tomorrow. I think another one that is also pretty possible, and again, we've got this 42.12 kind of as the objective. Imagine now this is support. Imagine we use that support now, right, as resistance. That could be something that we may see, right? We see a really strong move down. We find our channel and we think about using that area now, right, as resistance. What these will usually look like is like this. They'll make a really strong move down, really strong punch lower. We find that bigger channel, right? We usually will pop up pretty good, get above that moving average. Let those buyers, now remember, anytime we see a strong move in one direction, the odds are pretty good they're going to retest that low, right? In this example, that low, right? So get above the moving average, get those buyers to try to buy it back up. Once they do, we can trap in those buyers with their stops and sell with a buyer failure off the high of that channel, right? Again, imagine using this low as a key area of resistance on that deep pullback. There's kind of three parts to this, right? The first part is that strong move through. That confirms the breakdown. The second part is finding that channel. And the third part is using that prior low, right? And not letting that big pullback fool you. All right? That's going to be a couple ways for us to trade this thing as it goes lower. There's a few more here. There definitely is a few more here. We'll talk more about the breakouts going lower in the NASDAQ, though, because I'm running late on time here right now, and I want to make sure we keep this video going. I'm sure there will be some other variations of these here for tomorrow, so make sure you come out and join us in the trade room, and we'll fill in any empty spaces. Let's go to the NASDAQ here right now. NASDAQ is very similar, as you can see. Just like the S&P, we had a big rebound early in the overnight. That rebound, of course, went a 1, 2, 3 move higher, and sure enough, like we always do, we mark up the high, we mark up that low, and we buy our, look at that trap. Look at that beautiful trap right there, right? Gorgeous trap. And again, whenever you see a big move in one direction, you know the odds are pretty good they're going to retest the high. It may not keep going forever, right? But it will almost always retest the high. That's why that is such a money trade, right? It may not go forever. We don't know. Some of them do, right? So market runs higher here, goes right into a trading range, right? Goes right into a range. We can see here the market popped up. The buyers really never got, the S&P was a whole hell of a lot easier to trade. It usually is. So let's face it, the S&P is a little bit calmer than the NASDAQ. NASDAQ's under some big time pressure right now because all the stay-at-home names, all the tech names, right? They of course they're under pressure right now because of the virus slowing down, right? The Omicron is just a bad flu bug, things like that. So long story short, the buyers, of course, try to push it higher here, and you can see the FOMC came out and just completely wrecked them, right? Buyers try once, buyers try twice. Gorgeous trap. Beautiful example, by the way, of a crown reversal off the high. Market punches, right, and runs lower. Again, just like the S&P, we have a very strong run down, right? The market obviously is very bearish right now. But where do I sell? Where do I sell? Again, we've got this major low, and I'm being very generous with this. I mean, you don't need to. It doesn't take a very experienced technician here right now. See this whole area, right? This whole area could be a support zone, and I'll tell you, look below it. We have that next to the S&P is a lot more forgiving for the sellers right now. A lot easier to get a breakdown in the S&P and get something going, right? Look at the NASDAQ here. They get that low right there. So it's really, like I said earlier, where the bears have all of the momentum, but as far as being a seller down here, that does not look very easy right now, right? So we definitely have the same kind of situation, but I think it's even a little more difficult here on the NASDAQ. I think the big variable on this right now is this trading range. This channel is pretty much useless. I just want to put it on there so you can see. I like the way these lows line up, but like I said before, if this thing starts to pop back up, it's going to be very difficult to sell into this. I got my trend line coming down. That is somewhat important as we go through this. I'll redraw that down off those highs there. And of course, the range, of course, is the magnet. Speaking of range, that's the big variable, right? That's the big difference here. The S&P has what looks to be like higher highs, right? The S&P looks pretty good there for that nice little trap going back up. Yeah, the NASDAQ, not so much, right? Not so much. So what do the buyers want to do right now? Well, one very strong similarity here for the NASDAQ is that, yes, if we can get a retest of that low, now this 2-try failure looks really, really attractive. Because why? Because that range is a magnet. Right? So if we get underneath that trading range, absolutely I want to be a buyer, within reason, with the right setup, of course, right? I also think, too, that if the buyers can get through this pendulum swing, remember, ranges are balanced markets. So the amount that we go below the range is oftentimes the amount we go above the range. And so I would assume you're going to see another round of, we'll see how many sellers are up there, but I would be prepared to see some more bears coming in up around that area. right? And so what another thing we might do here for the buy side is get through that area, right? Start looking for, maybe a 1, 2, 3, reversal. Can you use those areas as prior support as we go higher here? You could definitely kind of think about, okay, can we push through that area and then find our entries to finish off that move, going higher here? So as the market goes higher, there's plenty of options there. As the market goes lower, there's some pretty good options there as well. Remember, stay away from the middle of these ranges, right? We don't really want to do much here inside the range. So again, much like the S&P, if we do, with this big move down, if we do take out that low here, we are very bearish overall. So I do like to use the 2-try failure pattern, right? 2 tries whenever we're going against the trend, right? Let's see back over here, right? See how the market runs up. See how the buyers obviously try once, they try twice, right? It's a little trap right there. Money, trade. Now, obviously, it was right around the FOMC, so very dangerous time to be trading. But that's the idea behind it, right? The 2-try failure, because you're going against the overall momentum. So just that we wait for the buyers, in this example, to try once, twice, because it's so bullish, we want to wait for the sellers to come in and try twice, right? And go higher here. So if we do make it back down to retest that low, that's where we execute that 1, that 2. Now we've closed the loop. The range above us is the magnet. Stops are now hanging out right above that high. I would love to see a trap below a prior swing. Maybe it's a trend line, whatever it takes. I want that signal, right? I want that nice strong signal for that 2-try failure. And then remember, in these situations, you can trade the turn. We know where the market wants to go here, right? We know where the market wants to go. It wants to go, well, actually, in this case, it'll be even a little bit bigger, right? A little bit bigger. So that will be your new target, right? If we go a little bit lower here, that'll be your new target. Why do I mention that? I mention that because as the market now starts to roll higher here, we now begin to look for that rotation where we find that new channel, we drill down to our faster time frame, right? And we grab the entry off that channel, right? Again, this is a very slow time frame right now because it's going to allow me to get the whole thing in here for you so you can see exactly what happened today. We'll trade off a much faster time frame tomorrow morning in our trade room. 2-try failure into first test is the best test, right? Failure pattern, trap pattern, pullback combination pattern, all the entry patterns you're going to learn inside that free quick start trading course, right? They'll give you a roadmap for how we find trades every day in our trade room. Okay, that'll be a good way to buy off that low. And again, if you haven't taken that free trading course yet, remember, grab that link in the upper right-hand corner. Okay, so that's how we buy it as it double bottoms off of that low. What if we end up running higher? Well, it's a range. Right? It's a range. So when it comes to a range, there are a couple different types of breakouts that we can look for. One of them we talked about already, right? And that is the 1, 2, 3 breakout. Now these come in all shapes and sizes, guys. I'm just simply illustrating this one right now. Remember, it's not going to be enough to just see it pop above the trading range. We have to assume there are going to be some bears waiting up there. And that might not happen, but we have to at least assume for it, right? So let those buyers come in, show us they mean business by holding that pullback, right? Hold the pullback and jump. Remember, it's all about, can you jump off the moving average and keep going? We see a lot of very good tries. We see a lot of really strong tries to break out, but they don't keep going, right? That's the key. Ranges are magnets. They got to go up and they got to jump, right? Once they jump, now it's on, right? Now we can get pretty aggressive now. Now we've got time. Now we got momentum on our side. Now I can go out. I can find that new channel. Right? Again, I like to kind of illustrate it with this trap setup, right? Because that's what we're looking for, right? We're going to find those prior swings. Again, we're going to mark up that channel by drawing it right off those highs, draw it down off that low, think about those prior swings, get under the moving average, right? Use those traps, those failures, those pullback combos, and we know where the market wants to go, right? It wants to go back up, and it wants to retest those highs. How about a short squeeze? Yeah, short squeeze, very, very likely, right? Very likely for a short squeeze here. Again, you know it's a short squeeze because it's not going to go up and then pull back and then go, right? That's not a short squeeze. A short squeeze would not have those bears coming in, right? The bears will be buyers on a short squeeze, right? They get out. So we pop up, and instead of holding the pullback and going, now it starts to grind. You know what I mean? It grinds higher. And again, at that point now, you really want to draw that channel tight. Nice and tight there. Find that nice tight channel. Think about where those prior swings are. Get underneath the prior swing, under the moving average, right? And execute with confidence. Remember, first test is the best test, right? As we go higher here. All right. So very, very good there. If it was just a pop, you know what I mean? If it just pops up, that's exactly where you think about that 2-try trap, right? If it just runs, you know what I mean? It will run sometimes. If it runs like that, shallow pullback, higher high, you don't really need the channel. It helps, but that trap low will be, like I said, it will at least retest that high. So quick profit target, get rid of the risk, let it run, right? See how far it'll go. And these things could really go. They really could go. We'll talk about kind of some big targets on the oil, right? Because the technique I'm going to teach you guys on oil can directly apply to where some bigger targets, right? Other than the high of day up there, some bigger targets might be. Okay, how do we sell this thing now? Okay, so now we get a pretty idea of how we buy it. How do we sell it? So again, as the market goes higher, just like on the S&P, there's going to be a trend line right here, right? There will be a trend line here. So pop that trend line on. And so there is a chance this short may trigger, right? We go sideways here, we pop up, right? We go into our sell zone. Now, what's the problem? The problem is the trend line. We've got some pretty good momentum, for the bears, because again, it's a very strong move down, but we got this range above us. So this is a very good example of where a 2-try failure along with a 2-legged pullback can be used. We call these 2-legged pullbacks because it's 1 leg, 2 leg. They usually have a trend line coming up underneath. Okay. And again, because the range above you, because of the trend line there, once, twice, and usually that money is right off that trend line, right? It won't be support anymore. It'll be an area of resistance. The key is going to be letting the buyers try twice because of the range above you, getting underneath that trend line, and then using that trend line. Okay. And then remember, where's your targets? Mark up at the high, yep. Mark up that low. You know where it wants to go now, right? You know where it wants to. And you know what? If they can give us that short tomorrow, there's a very good chance this thing blows right to that low, and we might get that breakout pullback that we talked about before on the S&P, right? So imagine this area right now, right? Imagine now we go up, buyers once, buyers twice, we blow right through it, right? We then drill down, find our channel, and we're now using that, again, kind of the underbelly of that range. We're using it now as resistance. That's very, very possible. Now, the only way for us to really be confident taking that trade short will be for us to get a very good punch through that low, right? Get through that low on strength, because remember, if we have enough strength, then the odds of success increase dramatically for a retest of that low. Right? If all they do is go up and then come down and kind of sit here for a little bit, no, that's a buy going right back up using that 2-try failure we talked about before. So that's some ideas there as we go lower. The hard part for tomorrow is going to be this very small space, right? Very small space. Let's say we break lower at the open, right? Market takes off, we hold the pullback, and we go. Gonna be tricky here. This is exactly where a trap will come in handy. And this is exactly where a trap will come in handy. We get that 1, 2, 3 breakdown, mark up those prior swings. Traps are fantastic when you're trying to avoid selling too low. And so I think a trap would definitely be a prerequisite here if all we get is a 1, 2, 3 breakout. Right? What also might be easier too will be just simply basically a grind breakout, right? So it pushes lower, it grinds down. That'll work too. In fact, that's probably the most reliable one to use at that point, because the grind is such an obvious clue, right? Selling off top of that channel there, finish off that move. And don't forget, right, the breakout leg will be equal to your measuring leg. We've talked a lot about that this week already. If you missed the previous videos this week, we took a lot about that technique in those previous videos. So again, the key here is we either have to get up and then under the trend line, or we got to really get a strong punch lower. Okay. Now think about it this way too. What if we went 1, 2, 3, right? Strong move down. Okay. The bears run it lower. We get that short back down, right? Now what we call close the loop, right? Strong move down. We retest. Can you see it? Can you see it here? And then we go what? And then we go 1, 2, you got it, right? Trap low, 2 try failure, back up. This could be your 10:45, 11 o'clock trade tomorrow morning, right? Again, I'm just simply going over all the scenarios that we'll be looking for tomorrow together in our trade room. Again, I'll put all the info and the link in the description here, right, for the trading courses and all the trading access. All right. So again, strong move down, right? We find that short. Again, I won't bore you guys all the details again. We find that short off the low, right? Big move down. They sell it. They retest. The bears get what they want. They're sitting at major support down here. Then we wrap in those bears. Right? The bears try once. The bears try twice. Bingo. Stops are getting hit. 2 try failure. Right? And then what do? You go out and you grab that first test. That is the money trade right there. That's the money trade. Okay? A lot of times these reversals, these failures off the lows, a lot of times are tough to find just because it's a reversal and they're not always so easy to see or very confident to take. So if you don't have the confidence to take the reversal, you got right. That is the money trade right there. Get that first pullback. Right? Get that first pullback. You do not want to miss that first pullback. And again, if it keeps on grinding, right, don't forget, draw it even tighter, right? Draw it even tighter. Make that channel tighter, right, when it starts to grind, all right? And at that point, you know where the market wants to go, right? It wants to go right back up where we came from here today. All right, guys. But I'll tell you, a lot of really great options here. Like I said earlier, not that easy right now to be a seller, but as you can see, it's possible. It's definitely possible. How about some oil? Yeah, it does look like those bulls are going to run this thing up to that $90 a barrel. We might see triple digits here sometime in the next few weeks here. It feels like everybody's piling on right now. It feels like the easy gains in cryptos and the index of the last few months. It seems like those have all now moved over to oil. There definitely feels there's a bit of a rush to oil here right now, which is probably leading to a lot of this what really is unnecessary bullishness in all reality. There definitely is no shortage of oil on this planet right now. And anyone who's been around the markets for a while know this thing in Ukraine is probably going to be a nothing burger with cheese. So the reality is we're obviously bullish. There's no doubt about that. We are definitely bullish. I will not worry about the why, but the what is very bullish here right now, right? First leg up, of course, is always the measuring leg. The bulls, of course, go 1, 2, 3 and run right and run higher here. Just a fantastic example, though, of how anytime you see a very strong move here, right? Look where they come in to buy. Right below that prior swing, little trap, right? Look how they get underneath the moving average. The foolish bears. Who is selling into that? Who is selling that? I hope it wasn't you, right? Selling into that, and of course, right, getting their head ripped off for a failure. Anytime we see a strong move, you know they're going to want to retest the high. They retest the high. We go into a trading range. We had the oil report this morning, of course, at 10:30. That slowed things down. Now at this point, that range is the kind of the most important thing, right? It's a bull market into a trading range here. We get the puke, right? Which of course is coming out of the FOMC announcement right now. The bears, you'll notice, tried once, and now they're kind of hanging out around that trend line. I found that pretty interesting how they couldn't quite close around that trend line here. I'll tell you right now, the buyers have all the options right now. The buyers have all of the options we open up. The buyers would love to get back and retest that low and then rip it higher from there. We've talked about that many times already. Buyers might also be able to get up and over to use that trend line. We've touched on that a couple times already as well. Or if we start seeing this thing start to really push now, we may get a chance to trade the turn as we go hunting for what we call the pendulum swing, right? The amount below the range is the amount above the range. And I'll tell you, if we can get a really strong punch going higher, we can then take a page out of our previous playbook, right, with a breakout pullback, right? So there's a lot of options here right now for the buyers, right? We've talked about a lot of those throughout the video at different points, here tonight. I think the most important kind of factor right now, again, bull market into a range. The range is the magnet, but we do have this very strong move down, this very strong, breakout going lower. So it wouldn't surprise me if we do see bears come down, take out that low, and then our biggest job will be to make sure we get the Let's say, for example, one scenario would be we go lower, we take out that low, right? We what we call close the loop, right? We close the loop, right? We get this big move higher here, right? That kind of leaves an open loop there. They close the loop, right? This is an open loop for the bears. They close the loop back down again. Then what do? Same thing as before, right? Let the bears try once, let the bears try twice, and we look to find that entry, in this case, off that trend line. And then as you can easily imagine now, this now starts to run higher, and there's some good money to make in this as this thing goes higher here now, because now we find that new channel, we find those prior swings, we've got those traps, those failures, those pullbacks, right? Two try failure, strength, right? Trap, failure, pullback combination. Objective is back to retest the high. You got to leave a runner in that though. Right? The fundamentals are there right now, or the emotions are there right now. Probably good to leave a runner if you got some extra contracts on there. 88.50 is a good place to look for it. The more challenging way to do this will be if we go higher here right now. What you want to think about on this trend line is you're going to want the up and over, right? The up and over. One of the things you don't want to do on these trend lines is try to quickly buy that first pullback. For example, it'll sometimes go right back and pull back, and those are difficult because sometimes they'll come right back and come back down again. So we'll see the bears have tried once. If we can get this thing to go up, over, and go, that's definitely something worth, right? Proper signal candle there. That's definitely something worth taking. And maybe a half size position on that. Because at this point now the bears have tried twice, right? We're using that two try failure because of the strength of that pullback. The trend line, of course, holds, right, as support. And remember, too, this is going to be a trend line right there, too. There'll be a rising support trend line. So there's going to be a lot of great options there on that up and over and go. The hardest part here is probably going to be if this thing just punches, right, and kind of runs higher here. The most aggressive traders out there will draw a trend line off those highs down at that low, and they'll grab that trap. There's not a lot of meat on the bone on that, right? Not a lot of meat on the bone on that. So you're going to want to go relatively small position size on that. At least I would if I was taking that trade, right? The objective is there, and of course leave that runner as we go higher here. If things really get pushing, right? If things really start to push, look left. If we start to do something like this, right? If we start to really do something like that where it separates off that moving average, now it's very, very strong, right? So you're trying to find those channels, trying to get underneath the moving average, right, and go from there. So if it really starts to push, if it really starts to kind of grind higher here, I definitely think there's going to be, if we can see some good strength going through that high, even though we get the pendulum swing there, I still like this trade here because you can combine, right, that high. And again, we've talked about how kind of a breakout pullback. It's already a bull market, are a lot of emotions involved in this market right now, right? That trap, right? That failure, that pullback combination, right, off of that low. So if it starts to really grind going higher, that's a very aggressive trend. Any pullback is probably going to get bought. I do realize the pendulum swing is right there, so try to get in, and it might be a little bit of a thread the needle here. Want to go through the high before that pendulum swing gets hit. All right. And then if it happens to go, if it really goes through it, right, then we start looking for that deep pullback, get underneath the moving average, rope in those bears, and go from there. That'll be something we'll have to watch there, as we go. Or maybe it pops up, maybe they hold that pullback and they blast, right, and we start going. Great. Find the new channel there. Drill down to your faster time frame. First test is the best test. That'll also work going higher. If we have that much strength, absolutely, right? Nothing's ever guaranteed in trading, right? But that's a pretty high odds of success. It's a pretty high odd trade right there. If we can get it to come back to this area, even better, right? Once the breakout, pull back, get underneath the moving average, rope in those bears with a failure into pullback combination, right? Target there. And then don't forget this leg, right? That first leg will be your symmetrical leg, right? On the third, remember we talked about it earlier, right? A lot of times, like we saw back here, right? The first leg, the middle leg is almost always the oddball. The first leg and the third leg are the ones that are really, really important, right? So if it does, up, back, and go, and we do get that pullback, right, and get the entry, where's the target next? It's pretty easy. You mark up that leg, and that's where they're going next. And obviously $90 is up there somewhere. Yeah, right there. What is it? We're at 87.25 right now, right? So, 2 3/4, $2.50 going up. Not a big ask for reaction Thursday here. So, how do we sell it? How do we sell it? I think that's probably the hardest part right now. How do we sell this market? Definitely not going to be easy if it goes higher here. Well, I shouldn't say that. Let me rephrase that. We have a very strong move up. So we know the odds are pretty good they're going to retest the high. At that point now, what can we do? Crown reversal. Absolutely. If you thought the same thing, give yourself a thumbs up in the video right now. Strong move up, we retest the high. Right? Now what do we do? Now remember, the stronger the trend, the bigger the two tries need to be. The stronger the trend, the bigger the two tries need to be, right? I'm not going 1, 2 short in this thing. It's a very strong trend. So 1 try, 2 try, right? This is not going to happen. It's not going to happen in a couple minutes, all right? It's not going to be 5 or 10 minutes. It'll be probably 25, 30 minutes, right, to get that reversal, right? Buyers try once, buyers try twice. All their stops now are sitting a little low, right? I always like to make sure I'm trading either off a trend line or a trap line, right? Off resistance, get that nice strong signal, and they dump it back down. Remember, at that point now, find that new channel, hit that first test, right? Grab that trap, grab that pullback, grab that failure pattern off that high. So that's a definite way to sell this. Now, obviously, again, we'll have to look and see what that looks like tomorrow in the trade room. Remember, though, very strong bull trend right now. That is not going to be a small setup. It's going to be a very big setup. All right, it'll probably take a while for it to go once, pull back, try second time, and then bam, right, short that thing back down again. And again, if you're not comfortable or if you're very risk averse, this is not the trade for you. Wait for that turnover and then really hit it right there, because that's the one you can trust the most. Because now you got momentum on your side, good channel to work with, right? The bulls are getting trapped out. That's the one. That's the one. If you couldn't stomach the idea of shorten it, or we hold the channel, we end up running lower, 1, 2, 3 move down, find that new channel, grab that first test. There's nothing wrong with just simply waiting for a 1, 2, 3 breakout. Nothing wrong with that at all. There's that range down there, and you got the 85 area. If this thing turns around tomorrow, I would imagine that 85 becomes a very big objective for the bears. Right? And again, this might be they may retest 1, 2, get that 1, 2, 3. You know what I mean? We might be off the races that way, later in the session tomorrow. So we'll see. We'll see. But again, pretty much all those patterns we talked about earlier, right? 1, 2, 3 break down, right? Spike and grind, find that channel, right? So all those will apply here to the oil as well. All right, guys. Well, boy, the video got pretty long on me here, so thank you so much for watching all the way to the end. I'll tell you, if you're watching right now, if you're still watching this video right now, you are the trader I work hard for. I would love to work hard with you guys every day in our trade room. I'll put all of the membership links, all the free course links, everything you guys need in the description of the YouTube video. Don't be afraid to call the office either. I'm always here to help. If you guys have any questions about brokers or charts or data or how to stop losing so much money every day, I'll be able to help out. Just call the office and I can definitely help, get you on track here, guys. All right. Don't miss the big move of the day tomorrow. If you're sick and tired of taking too many losses or missing too many of the good trades each day, that is exactly what our trade room is for. Hopefully I'll see you tomorrow morning at the opening bell. Call the office if you have any questions. Get registered. I'll see you guys tomorrow. If not, we'll come back and do it tomorrow night and get us ready for Friday's trading session. As always, thanks for tuning in. My name is Joseph. Now get out of here. Be well. Be nice to each other, will ya? ya and be here next time. Adios, amigos. Bye-bye for now.